like 3 copies of that thing going. That's all right. You can just get a screen up. Yeah, okay, we're going to stop there. That'll work perfect. Okay, so tonight, sorry for the confusion, but we're good to go now. What we're going to be talking about tonight, though, is banking kind of stuff. And again, this is one of those nights when we have a little bit of not super extra time, but we can go off in discussions. And by all means, if you have questions and stuff, that's the good thing about a smaller classroom. It's more conducive to talking and discussing stuff. So factors. We're going to talk about some of the financial services now. Again, this is just one of those things where it just kind of reinforces the, hopefully a lot of these services you won't see. Check cashing services and some of these consumer loan type things. They're fairly confiscatory in terms of the interest rates they charge. I had a friend, for example, who we're down in Florida, and he was getting 20% return on money he was loaning this guy. Well, what this guy was doing, he was loaning right back out again, doing used cars for guys that didn't have great credit. So these guys who are doing these used car loans are probably paying in excess of 25% for loans. I mean, it's just obscene. And most places, those types of rates are called usury, and it's actually a legal practice. But it's a state-by-state basis, and there's always exceptions. There's ways they do it. If you notice, most of your credit cards are based now in the Dakotas. It used to be Delaware, but that's because those states don't have strict usury laws, so you can charge above that. Typically, the law, if you want to loan money to somebody, is supposed to be tied to a prime rate plus a certain amount, a few percent. It's not supposed to be up in the teens, and I mean, especially if the prime rate's not up there, and some of those other rates. So anyway, it's one of those things where it's just very expensive to be poor. Cost and benefits of savings plans, factors to evaluate savings plans, and the cost and benefits of different types of payment accounts. But one of the things, I'm not trying to be just a downer on this whole thing, but you just need to understand that if you're going to create wealth, which you need to do to retire at some point, a traditional savings account, even CDs and money market accounts, we'll go through and we'll talk about those things, but they're all kind of pretty much the same in terms of appreciation and wealth increasing. They're not keeping up with inflation, and so you have to do something more with that money, and whether that be like again for a lot of you, this kind of dovetails with owning a house or maybe owning some income property. That's certainly a way of doing it. And in the stock market, which is sometimes people are just too risk averse, but to tell you the truth, it is it's a proven way of making a fair amount of money. Come on in, this is our 131 class, yeah. I know, the room change caught me by surprise too. People listening on the distance thing are confused as well, but if they are kind of come to class, we're now up in room 315. Anyway, costs and benefits of different types of payment accounts. So we'll go through all of that, and we'll look at some examples and talk about how to manage cash. So used to be very distinct differences between banks, savings and loans, credit unions. It used to mean, a credit union was prohibited from doing many types of transactions, and transferring back and forth between accounts or doing certain things. They were prohibited by law from doing it. Most of that's been erased. Most of that, people don't, you really don't care. It's, what is it, Alaska USA, that's a credit union, correct? Wells Fargo's a bank, Northrim's a bank. But, in actuality, for you as a user, it's just like terminology, because one, they'll call it a shared account. And anyway, it's fairly transparent to you because the services are fairly common. And then in that other realm, too, you don't even have to, stay with the same bank. I mean, you can bank with out of state. You can go use also. I mean, I've got a a bank overseas banks now are pretty difficult. In fact, if I wanted to get another bank account in Germany, I'd probably be prohibited from doing it. Not because the U.S. wouldn't allow me to do it, but the Germans or Swiss or whatever, we just are too regulation intensive now because, anyway, our government always wants to inspect everything, and the compliance issues are just too much for these other governments to pay, and we're just, American citizens are just usually too much of a bother now, so people want the accounts. But anyway, we'll keep it more generic to things that apply to you, and part of the homework tonight will be to do a comparison, and I'm not trying to get you to switch your bank or whatever, but look at what else is out there and decide what's best for you. I have a couple different banks, and I still have a bank in Texas that I've probably had for like damn near 30 years now, I guess. And they've always been sort of an online kind of thing, but they were a military bank. But USA, you probably hear of them. Most military people probably have some brands. They've got good things and bad things going with them. But in terms of some of the fees and stuff, since I have to do wire transfers, they're actually fairly easy to deal with and a little bit cheaper than some of the local banks. So anyway, that'll be part of the thing. And then, we'll also look at, some of the online stuff and some of the accounts that say, we pay interest on our checking accounts, and we'll talk about that, the kind of, drawbacks and what works with all those types of things. So managing cash, me personally, I do not keep much money in cash. I mean, if I've got, this notion to have a big emergency fund, I've got access to money if I need it, but, most emergencies are not solved with cash, unless you're paying, ransoms or drug deals or whatever. Most, if your car breaks, you need a credit card generally, or it's just as easy or preferred. So the notion of having to keep large sums of cash around. Now, again, I don't want every emergency to go onto a credit card that I can't pay off for months. That's not good. But I would try and keep it in some sort of investment rather than, idle cash, because that truly is going down. Although, we're getting to the point now where they're actually talking about, and they've done this in other countries, where they're paying negative interest rates, where you give them $1,000 and you come back at the end of the year and they give you, $997 back because the interest rates are just that low. It happened in Japan and it may happen here. And from a government perspective, it's like they want people to spend money to kind of stimulate the economy. And anyway, it's a strange situation right now with these super low interest rates. But again, they're trying to do that to spur on the economy, but it doesn't always work. So now they're talking about managing cash, and they're talking about overspending using credit cards. Well, when you're using a credit card, obviously you're not using cash, you're putting it on the card. And cards, I do tremendous amounts of, I put everything I've got on credit cards. I mean, me and my daughter, for example, we went to Vancouver and Whistler over Thanksgiving. I didn't even touch one Canadian dollar or loonie or any of that kind of stuff because it's just, you get burned on the exchange rates when you're buying and doing that, and then you're dealing with coins. And anyway, everybody will take a credit card. So, especially if you've got traveling to be done, Alaska Airlines or somebody like that, you'll have one of those credit cards, you'll ring up the miles. But that's all a great plan, but if you don't pay off that credit card every month, you could have bought the tickets several times over. You are paying dearly for those tickets if you carry a balance. The other thing, not having enough liquid assets, cash, checking account to pay current bills. So again, some sort of fund, but in terms of having whatever $10,000 sitting in a safe, that's not a smart policy either. But going into debt for minor emergencies or day-to-day living expenses, if you're financing, if you're rolling stuff onto a credit card for daily expenses and you're not paying that off at the end of the month, then that's going to be a strategy that's going to get out of control quite quickly. So that's what they're talking about. Last one, using savings or borrowing to pay for current expenses. you shouldn't be in that case. But just the same, it's a fine line. You want to sort of max perform your account at the end of the month. If you've paid yourself first, you put whatever percentage aside, you did your bills, and then you end up with very little at the end of the month. Well, that's not necessarily a bad thing. That means that you're doing the best you can, as long as you're not wasting money. Anyway, failing to put needed funds in an interest-earning account or investment plan. So, the interest-earning accounts that they're talking about a lot of times here are just some of these savings accounts, and I've pulled some of the sample rates today, and you'll see just how low they are. And you'll see that even in comparison to inflation, they're not enough to even compensate for inflation. So again, you're losing money. Inflation's a constant, not constant, but it's a constant force. The amount's going to change, but any investment you have needs to factor in inflation. And then, my personal strategy is to keep a minimum amount in low yield cash accounts. So yeah, I'm not even concerned with whether my checking account pays interest or not, because I don't want that much money in my checking account for all sorts of reasons. Number one, a checking account, if there is going to be some identity fraud, theft, your checking account, if it gets hit, you got serious troubles. That's cash. It's gone. If you get ripped off on your credit card, just report it. You got to check your statements quickly, but that's really a problem with the bank. By law, they have to cover it. Debit cards, not so much. So I used to be a big debit card guy where I used debit cards all the time, but and most banks will cover fraud concerning debit cards, but they're kind of doing it out of the kindness of their heart. Credit cards, they're required by law. So when you get these things about, we're trying, protect credit card fraud, and they always couch it, they make it sound like they're looking out for you, which they are to a certain extent, but they're the ones who are on the hook for it. So, especially like if you have the newer cards with a chip, the reason why they're insistent about the chip is if there's fraud with that card, if it's got the chip on it and the merchant didn't use the chip, they're liable for the fraud. If you use the chip, then the banks, it falls back to them. So it's all about recovering their money. But has anybody ever had that kind of problem? Yeah?
Yeah. I used a debit card to pay actually a speeding ticket on the APD website. It was the only thing I ever used it online for. And then 2 weeks later, someone in Europe spent like $250.
We'll talk about Europe. I'll show you some examples. It's amazing. I mean, I've actually got some videos now I can show you, but it's
really easy.
Yeah, I was in Madrid for 4 years, and I went through, even now, because my daughter, she has a copy of my regular credit card, Alaska USA thing, and she uses it down there, so it's always, but it always shows up, not always, but literally 3 times now, some Walmart in Alabama, we get hammered. And it's not, it's usually the bank catching it first. But because the card's used in 2 different states simultaneously, it is kind of a problem for Bank of America, but they're usually on it because they want to stop it, and you go to use your card, not authorized, and sure enough you call them. Or if you're going to do any traveling, give them a heads up, especially if you're going overseas and you're going to be in a bind. You want to call them and say, okay, this is where I'm going from such and such a date. Because one time, I guess it wasn't this Christmas, the last Christmas, went to Hawaii, sure enough the card stops. But it's just an inconvenience. Even after the fact, tell them on the phone and say, yes, I am in Hawaii. Yes, I am doing this. And then they turn it back on. But it's, again, they're getting to the point, and, there's algorithms and all their secret stuff. They aren't going to tell you exactly what's going on. But when they see a change in patterns, they shut off the card. So, yes?
I was in Seattle a couple months ago, and I used my credit card 3 times, and I'm standing right at Nordstrom's, and my phone started buzzing, and they're texting me, is this charge yours?
Yeah.
And I just texted yes, and they turned it right back on, and sure enough, it went right through. But I didn't even have to call. It wasn't declined. They just kind of held it until I text back.
Yeah. It was that Alaska USA one?
Bank of America, Alaska Airlines.
Oh yeah, same. Sorry, but yeah, it's and most of them will do that. Now, I think I told you about this maybe about a savings account where a lady, and I don't even think she was a crook. I think she just literally I mean, she would have known after 9 months of not getting cable and not having to pay for it. But she had my savings account number for this bank that I didn't even use, and it drained that bank account. It was just a small amount of money. I didn't keep any money. But then they started rolling it onto my credit card. I'm like, what? And that took some doing to get that undone, because I let it go on for many months because I wasn't paying attention. So anyway, I mean, I'm telling you to review your credit card statements every time, but you got to basically review kind of everything. And the best thing to do is to, well, get a credit report and see what you got out there. See what's being reported on. And if it's like some, I don't know, Old Navy or Gap or some card that you signed up for, just close it. If you're not using it, you probably don't need it. Because also, if say you have, whatever, it's going to lower your credit score if you've got a bunch of credit cards out there that are open, because nobody knows. The credit card company, say you want to go and buy a car, and they say you've got whatever credit card score, and they approve you. They've got to assume that if you've got, whatever, all these different credit cards with say $60,000 or $80,000 of open credit on it, there's nothing to prevent you from buying that car and then going out there and ringing up all those credit cards. So they're, in some circumstances, assessing you with a lot of outstanding debt. Now, if you've got all those credit cards maxed out, then your credit score is going to be even worse. But my credit score is up and down and up and down. I really don't worry about it. I don't care, because I'm not, particularly financing that much stuff. But I do roll when I have a small business on the side. I put everything on the credit card, and then I'm paying out-of-state tuition in Auburn, which is kind of pricey. Anyway, on the credit card, if they're not now, if you're ever in that situation, go, I'm going to use my credit card for this, but they have a fee where they charge you like 3%, which is common. Sometimes because literally when I'm selling something like panels to a guy, whatever, they're going to charge me. I use Square, these little things, but they charge me 3%. So if I've got a choice between cash, credit, or check, I kind of size the person up when they say, how do you want me to pay? Now, if they look like they're going to throw a couple extra things, put it on the card, I'll encourage that. But if I know they've already spent it, I want, cash or check if they're willing to do it, because it's, on a, say, a $5,000 transaction, 3% of $5,000 is a fair amount. I'd much rather keep that $60 or whatever rather than give it to Square. So anyway, you can get different plans, different credit cards, different rates. I'm just a low user, so I don't pay any monthly fee to them, so my take is a little higher. And like, for example, like an American Express card, anybody got one of those? They're fairly worthless. I'm sorry. But I mean, those are the cards, it's an extra, lump in your wallet, and when you go to use it, it's like, we don't take that one.
I've had that happen a lot.
Exactly, because they want a percentage. They take like 4. And the other thing about American Express and some of these other cards is they aren't necessarily true credit cards, whereas you pay off your balance every month. There's none of this rolling it over. So they've got different products. You have the blue card, there are other cards. But a lot of times, like I have to do it for a contractor I work for, they want all their business expenses on it. But it is just such a hassle, because just when you need it the most, boom, they don't want to take it. So, and then you end up with multiple statements. So anyway, so in summary on all this stuff, don't keep lots of cash around, because it's a liability. It's being eaten away by inflation. Conversely, don't make minor emergencies have to roll onto a credit card that you can't pay off. But what I would do is, I'm not just out there blowing that money rather than keeping the cash. I would put it into something, like Lululemon. But I finally sold some of that today. It actually came back up. And again, stock market, if you've got the wherewithal, you can ride things out. I was down 25% like a month ago, and now I'm back even. So it all works out. So types of financial services. Talk about savings, times deposit, certificates of deposit. Things with savings. If you're willing to give up a little bit of liquidity, they'll give you a marginally higher rate. So that's what certificates of deposits are, And savings accounts generally pay more than checking accounts. Checking accounts normally don't pay anything because it's, all those things have theoretically a little less liquidity. But checking accounts are demand deposits, right? You can also, do borrowing from banks. But again, the thing with borrowing, what usually determines the interest rate that's paid is the collateral, the risk to the lender. So, for example, cars, you can get cars for very low interest rates typically because the laws are written as such that they can come repossess your car quite easily. It's not even like a house. A house, you got to notice, all that other stuff. You fall behind in your payments, you signed the paperwork, they're coming to get it. So they can recoup some of that pretty easily. Granted, it's going to be depreciated a bit, but still, they've got some collateral. It's a secured thing. If you go in there for what they call a personal loan or just a credit card, again, none of those are secured. There's nothing. They can come after you, but it's basically it's based on your signature and your willingness to pay. They can't repossess. They can, but it's more involved. A home mortgage, again, although there's a process they have to go through, it is a defined process, and they're going to get that house back if you quit paying bills. So, other financial services, insurance, investment, real estate, tax assistance, financial fund. Anyway, different things you'll get involved in that fall into the realm of financial services. In a trust, most often you get involved in a trust when somebody passes away or somebody becomes unable to take care of their own affairs. And so a trust is legal agreement, management and control assets by one. So if you get stuck in I don't know if there's a political correct term, but if you get sectioned, that's what they call it in the UK. If you get put in an asylum, that could happen. But if more than likely it's something about somebody's deathly ill and it's a transitional thing. So here we get into all these kind of nuances between like asset management account, money market account. Asset management account, money market account, typically what they're used for is like, say I sold some stock today, right? So it takes 3 days generally for that money to settle to get back to my account. Stock, the purchase is done almost instantaneously. But they don't send me a check, right? They put it into my asset management account. And so it just puts it into an account. It also is if you're going to have cash somewhere, your sort of your emergency fund, an asset management account, a money market account that's associated with your, let's say you're squared away, you're paying yourself first thing, you're buying stocks or mutual funds or whatever through a broker. You should probably have if you are going to keep some cash, say $5,000-6,000, something like that, in an asset management account that you can quickly get. And the reason why I prefer to have it there rather than a bank is because, one, the psychological aspect. You're not so quick to go, I'm just going to transfer that back to my regular checking account and boom, you blow it. But you put it in an account has a lot less traffic going through, a lot less volatility. If somebody is executing some fraud on that account, they're going to see it. You shouldn't have really any outgoing transactions if you're in saving mode, which you should be for the first 4 years of your life. I mean, everything into that account ought to be going up, and then medical something or car blows up or something, and you initially pay for it with a credit card, and then within a month you go to your asset management account, you draw that money off, you pay it off, and then you work towards reestablishing that cash, kind of the rainy day fund that you wanted in the first place. So, tracking money in one location. So, I would have it associated usually with wherever I'm going to do my investing. Consolidated statements, especially this time of year. I've got like 6-8 different investment companies that send me stuff because it's just over the years, and it is kind of a mess. It's easier to have it consolidated. Lower fees, ease of tax reporting, communication fast. If you were to pass or something, they can go to this, Fidelity or whoever, one of these companies, and all your stuff would basically be there. So, online banking. These guys are not quite, with the 90s here in terms of most brick and mortar banks and online banks. There's a few truly online banks that have no facilities anywhere, but more and more, most banks have, their regular, like Alaska USA thing, and they also have their online presence. And so, the benefits and that, the cost of the customer, no paper trail, you can bank with, say, Alaska USA or Wells Fargo or whatever, and very infrequently have to go to the branch. Email notifications. So anyway, most of these things are available on either one. I'll show you a video here in a second about online banking. But concerns, these same concerns should be, felt. The other thing about, like, say, cost of ATM fees, if that's one of the, I don't want to use this, out-of-state bank because I'm going to have to pay all these ATM fees, it's dead easy. Most of the banks will reimburse you for whatever those fees are. So I don't use an ATM very often, maybe 3 times a month or something. But on my statement, there's always a reimbursement of those fees. So $6 or something. And I'm sure they've got reciprocal agreements with the other banks where they're probably hammering them too. And so it's just not a big deal. I've never had any problems there. Difficult depositing checks and cash. You guys use the auto deposit thing where you take the picture of the check? So, that's dead easy. There are limits on that. You can't do it for, like, they won't do my business account that way. And there's limits on how much you can do. But you know what I'm talking about, right? There's it goes by different brand names. But if you look at, deposit by phone or something, you basically, pull out your iPhone, you hold up the check, you take the picture of it, you type in the amount, and bang, it's done. It's just dead easy. And then you can literally just tear up the check. You don't have to do anything with the check. It's cashed. So that's, again, overspending potential. Yeah. Online scams, phishing, that stuff exists pretty much everywhere. But anyway, I do have the advantage of having worked with one of these for a long time, and to just pick one off the internet, I certainly would go with a company that I wasn't, fairly familiar with online, that had a fairly big presence, and I'd probably, go to that organization at least once. So, opportunity cost financial services. I talked a little bit about, if you're willing to put money in a CD and lock it up for 5 years, they will give you a slightly better interest rate, but only slightly. And nothing, I still wouldn't want to do it. I would, again, maybe you're saving for a house down payment, and it's absolutely something you're not going to need for 5 years. That's fine. And the truth is, if you need it before 5 years, you can get it, but you're going to get penalized. It probably won't be anything gross, but it's certainly going to be more than the interest rate you were earning. So refunding the ATM fees, and a lot of times they'll be in a network. But again, for this example, you're going to evaluate like 3 or 4 banks and just compare Wells Fargo to Northrim to Alaska USA, and maybe an online one if you want, and just kind of verify that what you think you're doing is a good idea. But there's all sorts of reasons to have a bank, and primarily it's the convenience. Any of those banks should be. I've had, I ended up at Alaska USA, but I've had Northrim and Denali, and there's just some buffoonery involved, so I just ended up switching to Alaska. But you may have different experiences. The other thing about some of these interest on your checking account, if you maintain a $500 balance, well, they're not paying you generally interest on that first $500. So that's essentially a loan to them. If you got to keep $500 in there and you can't touch it, then that interest rate, and that's what they're talking about here. With a $500 non-interest bearing minimum balance, that means that you've lost nearly $400. That's 6% compounded over 10 years. So this number is going to be quite misleading because we're not getting 6% anymore. This is back in the day. Interest rates now are down around less than 1%. Other things, yep, changing interest rates, rising consumer prices. You have no control over that. So, checking accounts and these types of things, they're just sort of a tool to get you to pay your bills and all that. This isn't really investing. If you're putting money in a regular bank, for the most part, it's just you're looking for. I'm not trying to make money there in terms of interest. I don't want to keep that kind of money in there. I will have a brokerage or a asset management account with somebody else. Future prospects for interest rates, again, you have no control over it. But again, if I can tell you, for example, if somebody said, hey, you can get 0.25% more if you lock up your money for 10 years, I would not be interested in that because interest rates are not going to stay as low as they are right now. And the same thing is true with like bonds. We'll talk about stocks and bonds later. But if you buy bonds and you get locked into a low interest rate, you will regret it because their value is based upon interest rates, and when interest rates go up, their value goes down. And then the other resources. But again, you probably aren't going to be reading the print versions of these. But there's Wall Street Journal is good, Forbes is all right. I actually prefer another one called Barron's that they don't talk about much in here, but it's good. So anyway, what I did was I pulled off some of these interest rates just a few minutes ago. And you can see that you're locking up your money for a 1 year and a 1 year CD, certificate of deposit, and it doesn't say, so it just says a 1 year CD, so there's may not be a minimum balance associated with it, but you're getting 1.3%, really. Using the rule of 72, it's going to take you like 50 years for that money to double at that rate. That is not good. You're going to be in retirement, and with inflation, well, that money's not going to double because the money will double, but that buying ability due to inflation. When a Coke costs $30 and you got whatever, it's not going to work out very well. This one is money market and savings, and you can see a little bit lower, 1%. Still, not what you're looking for. And this is nationwide too. So, this obviously includes Alaska. So in Alaska, you can get even somewhat less. And then this is a getting interest on your checking accounts, 0.2%, 0.65. I mean, inflation is low, but it's still more than that. And here's what type of one is this? Oh, muni bonds, municipal bonds. So municipal bonds normally tax exempt, but the percentage is 0.06, 0.61. It's just you're not in this market, and for the foreseeable future, you're not creating wealth. These are the inflation rates. So, in the normal times, inflation runs about 3%. It spiked up to 4.1 there in 2008, dropped a little bit when the economy really went south, and now it's just waffling and but still all but this one are above the rates you've seen for your savings accounts. So that's why hoarding cash, keeping it in a mattress or a gun safe is not a good strategy. I'll show you some graphs later on too about gold and precious metals. It sounds like a good concept, but it should be skyrocketing right now because there's a lot of turmoil in the world and all the rest of that. It's not happening because gold, silver, they're industrial metals, and so they're used in industry. And when there's industries not doing well, production is still high, so prices are depressed. So, if you watch, depending on the shows you watch, they may convince you in terms of interest rates to go there. So this, so we talked all those rates and the point whatever. This is the stock market. Now you can actually get. Now, did you sell in 2008? Hopefully not. If you did, you lost 33% of your money. But I didn't sell. I didn't sell a ton. And then 18% the next year, 19% almost. This is the stock market. This is just the Dow Jones. So the Dow Jones Industrial, a big basket of all the stocks, but not necessarily the riskiest. It's just a kind of an indicator of the direction the stock market's going. But 94, 2.1, and then the 33%. I mean, granted, there's a couple down years here. It is a roller coaster. But if you're in it for the long term, this is where you go. And if you add all these numbers together and divide by, by the barometer, anyway, you're going to get about 10%. So, but that being said, is this a good place to have your emergency fund? It'd be very bad right now. The stock market's down. But if you ride out the storm. And that's why there's a difference between when I'm saying, your emergency fund, you probably keep that in a money market account that might have the access to the cash you need. In the stock market, when they say, oh yeah, I got killed in the stock market. Well, did you sell today? If you didn't sell, you didn't lose. So, it can go up and down, but the only way you get beat up in the stock market is when you buy high, sell low. And some people clearly don't have the stomach for it. Now, the other alternative, in terms of building wealth, it would be, well, there's other investments, but the one I would recommend for people that are more risk averse is real estate. So, yes.
How much should you keep in your emergency fund? I mean, I've heard different things.
Yeah, and you've got like the Dave Ramseys and all these other people. I consider, and they're probably screaming at me, but I consider what I would call like an unloaded credit card, a credit card that, say I have a $15,000 balance and I don't have any charges on it, or I'm paying it off month to month. I consider that really part of my cash reserve. Other than that, I would think $6,000 to $8,000. Depends on your life situation.
I've heard like 3 months living expenses or 6 months living expenses.
Yeah, I think
liquid.
if I want to eat ramen in the dark, I bet you I could get by for $6,000 to $8,000. It's not going to be a great lifestyle, but I'm going to get by. You know what I mean? But you got to know your situation too. Some of these things, and I'm not here to politicize stuff, but the deductibles on some of this Affordable Care Act of ACA, $6,500. I mean, why do I have insurance when that's the I wish I could get insurance for the deductible. I mean, I don't have to do that, but there's 3 classes. You've got the folks that are poor that are going to get Medicaid, and then you got the people in the middle that would be the Affordable Care Act, the Obamacare kind of stuff, and then you get the elderly that are on Medicare. So anyway, those people in the middle, because of the structure, but that's a very political situation because there's no champions behind that medical system because nobody wants it. People on the left side, they want a single payer plan, something else, and the people on the right side probably prefer a private system. So there's nobody that wants sort of this compromise system that we got. So we'll talk about it in class. We're not going to spend a great deal of time on it because, in all likelihood, well, I'll tell you whatever happens in the presidential election at the end of this next time, it's going to go one way or the other. This thing they got right now is whatever. I don't think I'm even being political to say it's unworkable. So it's not going to go the way it is. But anyway, back to your question. Yeah, 3 months living expenses. That sounds good. But it depends on your situation. If you can get to a situation where, man, at some point when your house is paid off, well, obviously then your living expenses go way down. But I do, and I wouldn't say, I wouldn't want all my 3 to 6 months living expenses be going onto the credit cards. Once you get credit cards loaded up, it is difficult to pay it down. But we'll talk about that situation too. You don't just suck it up and keep paying that credit card. You basically fess up. There are people associated with the credit card companies that, believe it or not, are kind of on your side because the credit card company wants their money back, and you going into default and skipping out, filing bankruptcy helps nobody. So if you do get in trouble with a credit card, there's credit card, credit counseling people that are actually paid by the credit card people that are kind of on your side that will get you into some different type of loan. And what they'll do is they'll get that, say, your $15,000 credit card balance, and they'll put it on into a regular loan that you can no longer borrow against. It's no longer this credit card thing. You just need to quit that. And you pay off this other loan, and let's say maybe it's a 6-7% interest rate rather than 14%. So you've given up using the credit card anymore, and they put you into a consolidation loan where they, have some fixed rates, but it's a lower rate, and then you pay that thing off, and then you're happy, and the credit card, they get their money. You don't ruin your credit and everything else by doing a bankruptcy. So anyway, we'll talk more about that. But yeah, a reasonable amount, probably $6,000-8,000. Deposit institutions, again, this will be kind of the heart of your thing. And like I say, these differences between commercial banks and savings and loan associations they're not as great as they used to be. Now there's a whole other class of banks that they're like investment banks, and they deal primarily with business customers. Those are a whole other thing. They usually don't have private customers. But the difference between, again, Wells Fargo and Alaska USA and whatever, whether they call themselves a credit union or a true bank, there's not big differences. Mutual savings banks, yeah, this one's owned by the depositors. I don't care who owns the bank. I mean, credit unions use their own number. All this stuff is fairly transparent to me. I don't know. Does anybody have any? Is a diehard credit union person if there's some benefit?
I like not paying them to use my own money.
Yeah.
I pay no fees.
Yeah.
At all.
But okay, so anybody here got a Wells Fargo or do you have to pay any fees?
Sometimes I don't, because I'm grandfathered under my parents because they've had it their whole life, and so I don't have any fees.
Yeah. So if you are paying fees, she's got a good point, and that's why this homework thing. If you go, wait a minute, this is stupid. I don't have to pay anything, because you can get. It used to be like a credit union. You've got to be a teacher or associated with that. Or now most things have open memberships, and it's not a big deal. So yeah, if you're paying fees, or they're screwing with your money, what I'll tell you what happened with all the Alaska banks. I've checked 3 of them. I get some money from being a military guy from the government, once in a while, a retirement thing. And USAA, it'll be like the 27th, 28th, and boom, the money's in the account. All the Alaskan banks, it was like 2 days later. And I had other military people I was with, and he said, "Oh yeah, we just got paid today." And then I'm waiting. It's like 2 more days, and it's like this is not fair, because they've got that money, and they're kind of hanging on to it. So, but business wise, I have to use a local bank. Yes.
In all fairness, I've worked at Processional for
Okay, good. There she is.
And so the difference, though, is that when you have a direct deposit sent over, the sending bank will send it for an opening date that we have to release it for. So since you have a USAA bank, which also does reimburse all of those fees, other banks don't, as far as the ATM fees. So it can be costly using ATMs at other places, just a sidebar there. But for the release date, they'll send over the deposit with the release date. And so if that falls on a business day, like a Monday, we will release it that Monday. Whereas, like if it's your USAA bank, they'll typically release it like on Sunday, the day before. So it's based on the release date.
Well, I've seen it though on business days, because there's a guy, Troy, a buddy of mine. I'm like, where's my money? So what else have I said that?
A few things.
No, I want to.
Well, okay, so as far as if you use your credit or debit card, so the credit card is regulated under Reg E.
Right.
So you're still going to be not responsible. It's treated just as far as a credit card if you use your debit card as a credit. If you use it as a PIN-based transaction, there are different regulations on that. So your liability is $500 maximum.
Okay.
On a debit.
Right.
Credit, it's still under a credit card. So even though it's attached to your account, you're not.
But that $500, is that mandated by law, or is that a bank policy?
That's mandated by law.
Okay. So anyway, there are differences, because the credit card has long been established in terms of some of the fraudulent use. And the debit card is essentially it's like writing a check, if you run it through that way. Yeah. What about the chip and PIN stuff, though?
That's all new.
Yeah.
So
The way they do it in Europe, see, it is a chip and a pin. Even for a credit card, you have to.
And they do that depending on the financial institution. I don't know the one in Alaska, but in California, I know that they're doing a chip and pin requirement of the same. Here, it's the same. It's just, you're not going to notice a difference when you use your debit card.
Well, and back in my small business, the whole notion of taking checks, that's because I sell these big panels, and we're in Alaska. If I was selling them in California, or more accurately, Las Vegas, oh my God, I mean, it would be cash or whatever. I mean, you have to know what you're doing and what your customer base is and the propensity for fraud. So it can get pretty ugly. In fact, what I want to do, let me see if I can find, just to show you, kind of how bad things can get. I'm going out on a limb here. I'm hoping I can quickly locate one of these videos that I want. But now I'm going to have to find the ones. But I've got some of these scam videos that will just shock you. Yes.
There's a documentary made by Vice on how easy it is to scam credit cards, and you can basically just go on the internet or the dark web and you can just look up forums with people's CRN numbers and credit card numbers, and you just copy and paste it, and boom, you buy yourself whatever you want online.
Yeah, I tell you what, when we get back from, we'll take 10 minutes right now, and when we get back, I'll show you the video that pretty much just shows you how bad it can be.